Hey everyone, welcome back to the Money Level Show where we think, act, and prosper. I almost got my saying wrong at the beginning of this video. However, we're going to get into it today. We're going to talk about gold and where I think the price of gold is heading. So we got a couple of articles. We're going to look at some charts and such. And so let's go ahead and get a good, solid uh, perspective and idea of where gold is heading. So I'm going to go ahead and kick the intro and we will be right back to it. All right, see you soon.
Think, act, and prosper. You are now tuned into the Money Level Show.
All right, everyone, we are back. I've been getting quite a few new subscribers. So if you're new to the channel, welcome. I'm glad to have you here. Glad to have you watching the live stream. I usually go live quite a bit, but it's been a while since I've been live. I've been posting a lot of interviews and such, but I hope that that you enjoy the channel. So let's see. Homestead said, "Yo, give me that answer, brother." All right. We're gonna get into it. That's what we're gonna do. So I'm gonna go ahead and share screen. I want to go through this article first that I picked up from that I received from Yahoo Finance. We're gonna look at some charts and actually get I think just we get a solid idea of where gold is headed because I think that it's headed higher. So I'm gonna go ahead and share screen here. So let's go ahead and jump right into it. All right, so this is the first article we're going to jump in. This is from Yahoo Finance. It says investors should go for gold as rate cut looms, Goldman says. So this is Goldman Sachs saying this. Investors should go for gold as precious metals stellar run isn't over, Goldman Sachs analyst said in a research note. On Tuesday, gold futures hovered above 25.15 per ounce. The precious metal is off its all-time high touched last month, but still up nearly 22% year to date, making it the world's second best performing asset behind crypto. So gold is performing really well. Our preferred near-term long is gold. It remains our preferred hedge against geopolitical and financial risks, with added support from imminent Fed rate cuts and ongoing EM central bank buying, says Goldman Sachs. The firm maintains a 2025 target of 2,700 per ounce and issued a long gold recommendation. So 2,700 per ounce. This is what Goldman Sachs analysts are saying. So let's go ahead. We're going to look at the charts and just see like, okay, is this legitimate? Are they shooting for the stars here? Is this something that's possible? So that's what we're going to look at today. Let's go ahead and we're just going to read a little bit more of the article. Purchases by central banks, which hit a record in the first quarter of 2024, have been one of the biggest drivers of the precious metals rise this year. Bank of America analysts estimate gold has now surpassed the euro to become the world's largest reserve asset, second only to the US dollar. Now, we know why this is occurring because we've talked about this multiple times. When Russia invaded Ukraine, the U.S. froze their assets in which Russia held U.S. treasuries as assets and such. And so when America said, hey, we're going to keep your treasury since you invaded Ukraine, that pretty much set a divide between many nations, and many nations are now buying gold because the U.S. dollar was supposed to be the neutral reserve asset. And so many central banks are buying gold instead. Obviously, geopolitical risk and such with they're mentioning Russia, Ukraine, as well as Israel, Hamas. We're now seeing gold being used as an uncertainty hedge. As you can see, these are the numbers from the central bank gold buying and their purchases. This is from the World Gold Council. I actually interviewed Joe Cavatoni from the World Gold Council at the Rural Symposium, so be sure to check that out It's in my catalog. It was recent back in July, so be sure to check that out. Uh, Global physically backed gold ETFs have now seen inflows 3 months in a row as Western investors pile into gold, with North American activity outpacing Europe and Asia in July, according to the latest World Gold Council data. All right, so we see their cases for why gold should be going higher. They mentioned geopolitical risk, central bank buying. We've known that, right? Then also rate cuts, and so um, we're going to let's see what else they said. They said gold prices continue to hover at 2,500 an ounce, with a focus primarily on the size of the expected upcoming Fed rate cut later this month, wrote JP Morgan analyst. So you got these big banks out here saying that gold is going to go higher. I mean, even JP Morgan analyst says this, and we all know that some of us know that they were spoofing a few years ago and such at JP Morgan. And then it says, as of early Tuesday, traders were pricing in a 31% probability of a 50 basis point cut. So the Fed cutting rates by 0.5% instead of a 25 basis point cut. All right, so there we have it. In terms of, we have some big analysts and such that are saying that, hey, gold is going to go higher to 2,700. So this is where we're going to test this out. Or are these people crazy? Are they actually given a logical response behind this, a logical reasoning for this? So let's go ahead and check it out. Let's see. Homestead said, seems like a good number for the next step. Yes, we're going to look at that. All right. So I'm going to go ahead and share this tab here so we can see that gold still has a ways to run. This is the gold chart that is adjusted for inflation. As we can see, the highest it's ever been was in 1979, 1980, where gold was at $2,600. This wasn't the actual price of the metal, but this was the metal adjusted for inflation. And the dollar got you a long way. The dollar took you a longer way back then than it does now. And so now that we have gold at all-time highs measured in dollars, it has not reached an all-time high measured for inflation. And so just want to put that out there. So gold has a long ways to go to actually beat the all-time high for measured in inflation. Well, not beat it, but let's see. Right now it's at about 24.47. So, I mean, it's still got a little ways to go. So I just wanted to share that. Now, here's the next thing that we're going to look at before we get into the charts. Okay, so I've shared this chart multiple times, and let's see. So we see that, so this chart, just to explain it, you have the red line, which is the Fed's total assets. So this is the Fed's balance sheet. We know right now that the Fed is doing quantitative tightening. So when you look at this this huge curve and then it's going down, this is the quantitative tightening. And it's crazy because I look at this chart quite a bit, and I understand a lot of macroeconomics, so I understand what was going on at different points in this chart. Like, for example, 2020 pandemic hit, Fed's balance sheet went to an all-time high at that time of I believe it was 7 trillion. And then it just continued to climb up. I mean, you had multiple stimulus packages and such, and the Fed was buying the treasuries from the government, financing the debt. And then, you had inflation start ticking up. You had Russia-Ukraine happen, and the Fed came out and said, hey, it's time to start raising rates. And so they started raising rates, and they also said that they were going to start quantitative tightening, which means that they were going to sell government assets off of their balance sheet. As you can see, the quantitative tightening was decreasing the total assets of the Fed. The assets would be the government treasuries and such. You see this big bump here. This is where the banking crisis happened. So they had a setback with the banking crisis of last year. You had that pop up. They did the program where they would give banks loans and pretty much take on the assets of the bank that were unprofitable and such. And so then, they continue to do quantitative tightening. So they've been reducing the balance sheet. They haven't made a lot of progress in terms of, this big, huge spike here, but it's still been going down. So at some point, I think that they're going to reverse that. Now, sorry for all of that explanation, but it's good just to understand the context for what the Fed is doing. Okay, so as you can see, the yellow line, the gold line here, this is the gold futures price measured in dollars. So when you see, and then the blue line here is the Fed funds rate. So as you can see, ever since 2000 and even back here, you can see it back here in 2000, Fed cuts rates. It took a while for gold to respond, but gold started ticking upwards. The Fed raised rates significantly in 2006. And then when it came to cutting rates in the 2008 crisis, they started cutting rates. And as you can see, gold starts to move up, and then gold comes down and it moves up significantly. As the rates continue to get cut, then the rate gets cut to pretty much zero. Gold rallies, sells off, comes back, consolidates. Fed raises rates again starting in 2016 to 2018, right? So gold stays steady. And when they cut rates, gold started to rise again. As you can see, gold started rising again as they cut rates in 2019 to 2020. And then, as you can see, it's also pretty interesting as the Fed's balance sheet increases, you see gold price continue to go up as well. So the Fed cuts rates, they increase the balance sheet. You can see it right here. Gold ticks up. Gold ticks up after the balance sheet increases. And then it ticks up again after the balance sheet increases. So as you can see, like that's pretty interesting too. Now, currently, this is where we're at in the cycle. The Fed raised rates the fastest in history, and they're getting ready to cut rates. And so now you have gold. Gold has risen with the rate hikes this time. So it's risen with the rate hikes, as you can see, and they're going to cut. And as we can see historically, whenever they cut, the price of gold runs up. So I wouldn't be surprised to see the price of gold measured in dollars run up some more. So that is what I'm looking at currently. All right. So as we get ready to wrap up, I'm going to go ahead and share some charts, some actual gold price charts that we're going to look at and determine if this $2,700 price range is it realistic? Are they reaching for the stars or what? All right, so let me go ahead and stop this screen share and share this other screen share with Trading View. All right, let's see where I'm at. All right, here we go. Trading View. All right, so first we're looking at the US dollar, the DXY, and the price of gold. As you can see, it's very uncorrelated. So is it correlated or uncorrelated? Uncorrelated. So when the dollar goes higher, gold sells off. So as you can see, dollar, this is kind of interesting here where gold spikes up, but the dollar continues to go up, gold sells off, dollar comes down, gold rises, right? So this is an inverse relationship. So as you can see, currently the dollar has been on a decline. It's been on a decline while gold has been on an incline. So I expect the dollar to go down even lower. Obviously, if we get any type of liquidity crisis or some type of short-term market flash crash or anything like of that nature, then the dollar can spike because people will sell assets and go into the spike. Gold will sell off a little bit as well, and the dollar will spike. So we could see that. That's definitely in the cards. However, right now, the dollars continuing to tick downwards, and gold continues to tick higher. So now we're going to go ahead and I hope that you all are seeing this. Let me make sure. Okay, yep, you're seeing this. All right. So now we're looking at the actual gold price. Right now, it's at 25.35, and um, here on the chart, I have the Fibonacci retracement tool. This is to show, okay, based on, let me try to explain this right. So based on, you had gold pretty much uh, bounce, and then it consolidated a little bit. And this here was a local bottom, local low. And then when you see here, this is a lower high. So this high is, this low here is higher than this low here. So I'm doing a Fibonacci retracement from this low here to determine where the price of gold can go. So, and as you can see, um, you had this low here, gold rallied, it hit this range above this negative 0.618 range. It got rejected, came down. It did not reach support. Support's right here around 2,300. And then it rallied again. It hit the second range, but it got rejected back down, rallied again, hit the range, and then it broke through. And so now it's currently at this range here, which is about 2570, maybe a little bit less than that, and it's currently just chopping. So I mean, you could do some type of bull flag pattern that gold is going to break out above. So now if gold hits the high of this Fibonacci retracement, you will pretty much see gold at 2732. So that is the number I have, which it pretty much aligns with what Goldman Sachs and JP Morgan was saying in that first article that we read. So gold could hit $2,700 in the next few months. So we'll see if that's the case. We do know that Fed rates are coming. Fed rate cuts are coming. Stocks definitely sell off. We will see if that impacts gold as well. But however, based on the information that I provided today, the historical relationship between gold and the dollar, as well as gold and Fed rate cuts and Fed balance sheets. And then we've looked at the article of what some of the top analysts for some of the top banks, JP Morgan, Goldman Sachs, what they've said. And then now we're looking at the actual chart with the Fibonacci retracement tool, and it's saying 2,700. So we have a lot of information that says that gold is going to go higher. Obviously, we have the macro dynamics. Central banks are still buying, as well as geopolitical risk. I mean, we're in a toxic election season as well. So people are hedging against uncertainty. So we can see the price of gold definitely rally from here. So obviously we have to, keep an open mind for other possibilities as well. So I hope this was helpful. I hope that you all got something out of this, because the price of gold can go higher. And I hope that was insightful for you. So Homestead said price is rising back up off the dip already in anticipation, as well as I need more now. Yes, so I've personally been buying more gold. I've been buying a little bit at a time. So yeah, I haven't went and bought any large amounts, no ounces or anything. I would buy some grams here and there. But I've definitely been buying. I bought some, just recently bought a ring recently, gold ring, 14 karat. And then, so I'm planning on getting a little bit more. I think it's just right in this environment that we're in, the toxicity and everything. I think that owning more gold is an ideal thing to do. So, definitely, not financial advice, but that's what I'm doing. I'm actually still buying some gold, and I'm just buying a little bit at a time because I definitely need to keep some capital. So, all righty. So, Homestead said that's the way. Consistency and safe purchases. Me too. Yep, consistency, and always keeping some cash too. So, so if you're just joining, we're gonna get ready to log off and everything. I appreciate you all for joining me. Feel free to rewind this, watch this back. We went through quite a bit of information regarding the price of gold and where I see it headed. Um, in a short amount of time. So I hope that this blesses you all, and you all take care and keep prospering. All right, peace.